Good morning, everyone. This is Friday, December the 17th, so I'm going to bring you some brief financial news for the morning. We are actually on, or I'm on the marketwatch.com website, so you can see here on the left-hand side what the Dow, the S&P 500, the NASDAQ, and some of the other items are doing. So everything is pretty much down, unfortunately. So if you look across here, we're going to hit the U.S. markets. You can scroll for the Europe markets. Futures, rates, crypto, exchange things. So you can kind of see where the numbers are. Everything is down right now from opening, when the bell rang at 8 o'clock on Eastern Standard Time there. But, when I was telling my husband, up and down, it's all relative. So he was yesterday was saying, "Oh, my account's down for the day. I'm so angry, blah, blah, blah." I was like, yeah, but the market, when I looked at it yesterday morning, it was over 36,000. I'm like, you also have to consider, like, a year ago, the Dow or the market was only, the Dow was only at like roughly $30,000. And that was the high. So now we're at the high of the highest points of the market. You're going to have fluctuations regardless if it's down, $466 or not. But anyways, so it is down for the day, but overall it's still on the high side. So I'm going to take that as a win and such. Now, also just with the updates on the news, I did find this article about the Feds. They're going to they think the inflation can be stabilized without a recession. So they have some ideas on what they're going to do with that. I know we talked a little bit about hiking the interest rates potentially for 2022 and 2023. And then also they are buying fewer bonds in the upcoming terms as well, or actually currently, I think it already started going into effect. So they want to stabilize that. One thing you can also look at is the 10-year Treasury note. That's also a baseline for investing, corporate investors, things like that. So you got to see what is that 10-year Treasury note, U.S. Treasury note doing. So let's see. I'm trying to also kind of see if there was any fun and exciting news, right? So I did see, Dick's Sporting Goods. Good for them. They are buying $2 billion worth of shares back. They're repurchasing it from, people are selling them in the market. The company itself is buying them back. The reason for doing that is because then it creates more earnings within the company. Like, you have fewer shares, so your pot of gold is going to get bigger, right? So they actually are just doing that as a tactic to raise the prices of the shares as well for the long term. So they do have to file this with the SEC. So the board of directors are doing a $2 billion share repurchase program. This is actually an addition to a $202.1 million remaining from a previous 5-year, $1 billion share repurchase program that was authorized in 2019. So it looks like they've been doing this for a couple of years and buying large amounts of shares back. So it does say their stock has soared 77.7% for the year, while the benchmark S&P 500 index has only gained 24% for the period. So this and information I got from marketwatch.com. It's in one of their stories here. But I just wanted to let you know, use this as a teaching moment if you're not quite familiar as well, why companies should do that. They have profits. They have money they have at the end of the year or at the end of their fiscal year. They got to decide what they want to do with it. They can capital investments, maybe build more stores, update, remodel the current stores, pay more labor wages. There's a lot of options. They can pay higher dividends to their current shareholders. That's another option. Another option then is just to repurchase the shares back, which makes the pot of gold of what they have, like I said, bigger. Makes it look bigger because they have fewer number of shares overall. So I hope that makes a little bit of sense. Another thing to bring this up is, if it's a company that you want to invest in, go look at the financials and see what they're doing and if you like what they're doing and how they're doing it as well. All right, so there wasn't too much other information. I did find some I like the dirt. The former McDonald's CEO, I don't have it on the screen here. I did read that yesterday, where the board of directors, the former CEO, and I don't even know his name off the top of my head, was, not following the corporate ethics rules and dating people within his office, which is a big no-no. And then there was an investigation, and then he lied about things and such. And so now they're trying. It's a clawback, what they call. So the McDonald's company wants, like, it was over $100 million of bonus money and things back from the CEO because he lied. He violated ethics and then he lied about it. So we'll see if that happens, but. Well, I'm going to keep my personal comments to myself about that, but, you expect more from CEOs, but that's not always the reality either. All right, guys, so thank you all right, everyone, men and women, thank you for joining me today. I hope you have a great holiday season wherever you are, whatever you're spending or not spending. I hope it's just a joyous day and a joyous week for you. I know it kind of slows down the news week. But we can find some tidbits and things to talk about next week. So I hope you have a great day, and I'll see you on Monday.